Hello and welcome back to my daily reports market analysis videos with me, Rich Market Analyst at Hantec on Friday the 7th of February. It's Payrolls Friday, looking at cable. Sterling dollar is breaking down. Interesting that euro dollar is breaking down and now also sterling dollar as well. We've seen this consolidation throughout January actually into February, where every time you get the market around that 129.50 area to 130 big figure area, it tends to find buyers coming back in pretty much instantly. Yesterday we didn't see that. There was a shift. There was a change in the sentiment on cable, and that was a decisive solid bear candle that broke below the 29.50 support and subsequently closed below that support as well. Now that is the lowest close since that reaction day of 29.90 area mid-Jan. So decisive closing breach of that support, and we're now testing or eyeing up, I would say, a test of the key December low of 29 figure. Now, breaking down actually comes with the confirmation through the momentum indicators. The RSI at 41 is at the lowest level since October. The MACD line's pulling below neutral. That's not happened since October either. The stochastics are negatively configured. So it would suggest selling into strength, and pretty much that's what we have been seeing today. That old support, sorry, that's euro dollar. That old support of 29.40, 29.60 is now an area of overhead supply. All these lows that came in around that point in recent weeks is now supply of a big batch of sellers that I think that has been weighing on cable today. So you've got payrolls report today. It looks as though payrolls report, well, and from the movement of the dollar in recent days, it certainly looks as though that the market is anticipating a fairly strong payrolls number. And if that were to be the case, you'd be likely to see cable again breaking lower. It is basically flat on the day at the moment, but I think you'd be expecting to see a test of that 29 figure level. Now, I said on the morning report that if you take a step back on the sterling dollar at the moment, it is basically just sort of trading sideways and sort of still, I think, trading above 29 figure, you're fairly confident within that. And even if you lost 29 figure, you've still got these lows from October, November to really hold up. But unless you really broke down and moved below 27.65, which was that November low, I think you really are still holding on to a fairly neutral medium-term outlook. It's just that we've taken a near-term negative bias, which is starting to take hold. And as I said, pressurizing 29 figure is likely to be the case in this move. So although we are turning more negative and more of on a near-term basis, the medium term is still okay whilst 27.65 takes hold as support. But if that were to be breached, it really would turn corrective on sterling dollar. So with that in mind, I wish you good luck in your trading. Click here to subscribe to our analysis videos and go to our website to sign up for our webinars.